Hello and welcome to Simblified, where four people come together, make absolute nonsense. That's why we are a mutual funds.
So today on Simplified, as we do from time to time, we have we tend to invite guests who are much smarter than us, so we can learn from them while you do as well at the same time. And we have a real expert for you, bona fide, certified expert for you this time. Sameer Mohan is our guest here. Sameer Mohan is a product marketer, quizzer, serial book binger, and vlogger, depending on the time of the day. He's been in marketing services and products for close to 7 years. And after realizing engineering wasn't his true calling, he's currently the product marketer at Fisdom, where he also doubles up as a YouTube host. And he's going to take over their show, which is called Wealthcast, if I'm not mistaken. And which is basically a simplified with a little bit more gyan on finance-based things. So they give simplified without the mutual fund investment subject to market risk really fast part.
Or the mutual funds joke that I just made in the beginning, that also.
Or that.
That's
or
a USP, yeah.
Yes. So before we even get anywhere, and I think we need to, so this episode is going to be just getting some ideas on just getting to know a bit more about Sameer and his work, getting a few ideas about what are the big investment decisions, the critical investment decisions people don't make and the wrong ones that people do make. So on all of that, before we start any of that, we want to make the disclaimer that none of what we are going to blabber on about should be construed as any kind of financial advice. Mostly anything that you listen on Simplified should not be construed as any kind of advice. Yeah. But this specifically, I think, is a very important thing to remember. Yeah.
We should also mention that Sameer is one of Simplified's longest standing listeners. So So I mean, whenever we put out an episode, Sameer invariably with his pixelated image on Twitter pings and says nice episode or something. It's quite nice to actually not just have a quote unquote fan on the show, but just to know that these people out there really exist, because there are times we feel that some of these are just part of a bot farm or something. But it's good to know that
not just that.
Exist.
I mean, the biggest testament to Simplified is that some of our listeners are worthy of being called as our guests, which is quite a testament that
testament, yes, but not a very high bar to cross.
Hey man,
let's not kid.
I am giving myself that trophy. Don't take it away from me.
Fair enough. Also, one more thing. Sameer was actually, when we were discussing guests, Sameer's name was recommended by Tony, our fourth panelist, if you know, but Tony unfortunately cannot make the recording because he has caught the bug, unfortunately. So, Tony, this one's for you.
Yeah. Get well soon to Tony and his wife as well, both who are currently struggling with this particular thing. And Tony, who allegedly has developed a cough and cannot make it despite having COVID, not following Naren's example of coming in a banyan when he had COVID.
Yeah. So, anyway, let's move away from these bleak subjects and talk about happier things like the stock market.
Yes.
Yeah. So before we start all of this, I have a confession that I'm going to make over here. Yes. This is the first time the universe is going to hear of this confession. And hopefully, when somebody hears this episode 3 years down the line, history will show light favorably on me. I invested in the wrong IPO. Okay, so here's the thing. Series of events. So somebody I work with put out a glowing LinkedIn post about Ather, the electric vehicle maker. And at the very same time, literally the very same time, I saw Ather is going for an IPO. So I thought these two things were connected. So I immediately put a bunch of money into Ather's IPO. Later, when I was reading about this, after I got allocated the shares and all that, I was reading about this. Why are they only talking about specialty chemicals? Why are they not talking about the huge EV prospects of the country and all that? That's when I realized Ather Industries and Ather Energy are two completely different companies. As of now, my stupidity has made me 26% in 2 days. So let's hope this luck lasts. So this is my confession, and you Simplified listeners are among the first few people to know about
this. So Chuck, in simplified terms, you made an initial profit offering on that with the extra E. So there you go. Congrats.
Thank you. I'm sure there's a term for things like this. I'm sure Goldman Sachs also must have at some point of time put money in the wrong thing. They probably have a nice big MBA term for it.
Yeah. It's called Schadenfreude, probably. let's keep politically correctness about that.
Yeah. So Sameer, yes, tell us about.
Hey, hi, folks. So
Hi.
like you guys said, I'm no expert. I'm just a student of the market. I mean, and in the literal sense, because I have my
You
exams
realize
coming up.
all the experts say this. Sachin is like, no, yeah, I'm still such a student of cricket. Like, no,
Hey,
like,
no, but to be fair, and this is something I picked up when I spoke to Sameer earlier. He truly might be living up to that term because he's also a former marketing person, and I will take marketing people who say this at their word.
Fair.
So,
why?
Why
so?
Because I think marketing people are by definition ultra crepidarians.
Oh,
So,
Exit chat, but literal terms, I do have an exam coming up though. It's called 5A. So SEBI, which is our watchdog, hosts this exams through its NISM institutes. So I mean, I ran out of goals for this year. I mean, we hit a fitness goal and then other goals just vanished in the air. So I decided, let's give a goal for myself. So I just picked up the book, and apparently I used to see it on my company's onboarding HR portal saying that you've not completed this. I was like, this is relevant. Is this not there? What is this? And then suddenly, just one day, I just woke up and I decided I'll take the exam. I will have fun with this. Let's see where this goes. So my exam, the target date I have kept is end of July. So before that, I have to take this. If I flunk, I don't know. I don't care, but good experience. So that's why I still am a student of the
Your
market.
exam, my IPO investment, we'll see how these things turn out in a few months' time. So we have a lot to look forward to. But anyway, let's get into the...
So actually, let's actually begin with. So the thing is here, again, like you said, you began with marketing. I mean, actually, you began with engineering and then went to marketing and then turned up here, which is a natural progression, I'm guessing. So, I mean, just starting off is, how is your journey into this particular space? How did your interest get kindled in this particular space? How did you end up here?
I used to work with the Ken before, so ringside view of all what's happening in the industry, friends and all of that, friends of this podcast also. Enough Ken puns have been cracked on this, which I have bawled on the metro, and I've been, trying to write to Chuck saying that, hey, dial down, macha, too many puns here and all of that. And then ultra fans of Nutgraph, so Mutual Appreciation Society here. But one of the things that I realized, and this is very interesting, and this came out even recently. So this is something that our CEO Subbu also echoed. This is something that Nitin Kamath of Zerodha also echoed. For a population of around 1.5 billion people, we are at 5.5 to 6 crore active Demat accounts. Like that's literally 10% of the crowd, right? And this is Demat. Now, if you take that to something like, say, mutual funds, it's again another 60% of that active portfolios. So you're seeing where I'm going. I mean, forget the 1 billion. There is a huge under-penetration of the market itself. This is a problem statement.
And just to add on to that number, I was listening to Nitin Kamath in another one as well, where he said, of that 5 lakh number, there is, I think, a majority, about 60% of them are 10,000 or below in value.
Exactly.
So I mean, it's even more tightly concentrated as far as any kind of high value investment is. High value as in even like anything about 10,000 is concerned.
Yeah. And speaking, I want to go back to my marketing and product jargon. So there's one favorite thing that product people say. We want a hockey stick growth. Okay. It's like a proper uptick. All of this 5.5 crore, 6 crore hockey stick growth has happened in the last 2 years. It was a proper straight curve. March 2020, it's just picked up. It's not picked up the way it should be, but it has picked up. So very interesting. And, Geo is accessible. You have internet that is accessible. Business correspondence accessible for, smaller banks and bank branches and all of that. And yet this was always a curious problem. Why are people not investing? What is happening? What is not happening? All of that. So that is where I came into this problem. Always wanted to get into fintech as a result of this. Didn't know which specific problem statement should I go after. But this one I ended up because the numbers were telling. Boss, tea leaves were giving me symbols saying that, hey, either pe scope hai, tu bad sakta hai, all of that, right? So that's where the journey went in.
Okay. And so in this particular space, like, so when you were in your, so I mean, let's go even further back, like before you even entered the fintech space, but how you got into investing in the first place?
I still remember I was a 10-year-old kid. Okay, this is
way.
true story.
Oh,
True story. 10-year-old kid. I remember we used to come to summer holidays to Bangalore. It was in Mumbai then. I remember one day we were all playing and all of that. My mom previous evening told, "Listen, don't go play with your cousins and all of that. We have some work to do." Okay. And then she took me to this place there is a T Nagar in Bangalore also. And she took me to an SBI ka branch. And then one uncle used to come. My dad used to talk to him. Some money would be exchanged, blah, blah. That uncle was there. My mom was there. I was there. They asked me, okay, then we went to the bank. They asked me, okay, what are you doing? Which class? Basic chit chat. Then they asked my mom, gave my photo, asked me to write my name and all of that. That was my first PPF, Public Provident Fund account that my mom created for me. I still have that passbook. And to tell you the power of that, all my quiz winnings, all the quizzes that I used to win, all the small things that my mommy used to put and all of that, I ended up getting a car out of that when the account matured. And after 15 years. So it's a story that I cannot forget. It's a story that I keep telling people. I said, that's when I realized, dude, the most neglected lesson in maths, which was compounding, actually came to save me when the account matured. So that's how I got into investing. And at that point, I had given up, but then I saw some material gain and then head on at that point. And of course, I had to come back later because didn't have a full-time job, freelancing, blah, blah, and all of that. Once the full-time job came back, you were primed, you knew, okay, boss, ye bhi kar sakte hai. So yeah.
Fantastic.
Though actually this power of compounding thing, the other opposite is trying to get rich quick. So if I may be permitted, I have an anecdote about this. Okay, so
of course,
this is way back before any of you were born, Harshad Mehta time. I was working for a Tata company at that time, and full-time discussion in office from 9 to 5 was shares only. Everyone had. So I had no clue about share stocks. I was always seeing everyone was claiming that they made so much money, they made this much money. Then I started thinking that, I really need to get onto this. But how? I got one friend who used to sit in the sort of a few cubicles away. And he said, boss, you know what? I've got, in those days, trading used to happen through sub-brokers and brokers. People had to go into the ring and trade for you. And there used to be things called market makers and jobbers, they were called jobbers. So anyway, the long and short of it is, he said that there is a share that Harshad Mehta is buying. So we buy it now. And when people find out that Harshad Mehta is buying it, we sell it. So that was the thing. That sorted.
That's
so
advice aged well.
Yeah. So we made a kitty. Astronomical sum was on 20,000 rupees at that time. So pulled out me, 4-5 of us got together, we made 20,000 rupees. And to give you a perspective, my salary was something like 3,500 rupees at that time. So, I put all my salary and that guy put and 2-3 other guys. So we decided to take over a company called Radhakrishna Cement. So Radhakrishna Cement was a tip. So we went and told our broker friend, the guy who went inside the market, so you buy Radhakrishna Cement, but don't buy it all at once because then the jobber will know that someone's buying the company and he might raise the price. So he said, okay. And after some time, he came and he asked, are you very sure your tip is sort of, genuine? He says, why do you ask? He said, I went to the jobber and I asked him Radhakrishna Cement. So he said, 7 rupiah. So I said, give me 100 shares. And he gave me 100 shares. So because I didn't want to buy all of it, we asked to buy 1,000 shares. So he went after some time, he says, another 100 shares. After 15 minutes, he goes, the fourth orbit, the jobber told him, boss, for 7 rupees, you can have the entire company. So for a very long time, I probably still have shares of Radhakrishna Cement. One of my broker friends told me they would have been more valuable if they had been printed on softer and more absorbent paper.
Wow.
So opposite of compounding. Yeah.
Mm-hmm. Yeah, no wonder some of these are called penny stocks.
Yeah. Yeah. Oh my God. So from my perspective, I think I am probably the newest in this among this bunch as far as my investing journey is concerned.
Yeah, but interestingly enough, the savviest. There's a story to that as well. Like
no, not savvier than the Sameer is for sure, but still, no. But from my perspective, when I was talking to Sameer earlier, I mentioned that I started investing in 2020, and his first response was, "Oh, you're one of those pandemic babies," and I was like, actually, not quite. Because I actually, and this is where I started from. My investing journey began with when I had moved to Malaysia, and for the first time in my life, had a little bit of money that I could save. And so there I was. Then I reached out to Chuck, who was the only person I knew who was investing in any proficiency. And I asked him, "What is this nonsense?" And he said, "Oh, there is this place called Zerodha. Just go turn up over there. You'll figure it out what's happening." So this is all in January of 2020. When the world was open and there was no concept of COVID-19, or it was just starting off as some shit in China. And so I began my investing journey with about, I think 75,000, 15 mutual funds and 25 in stocks, which I distributed among some 500 stocks, exactly 12 days before the pandemic struck. With no context. Like I have entered the market not as a pandemic person. I have entered the market as a normal person entering just 12 days before the pandemic strikes. Then the pandemic comes, and then I am horrified. I refuse to go back to Zerodha for many days. And because I'm like, I don't know what happened to my money suddenly. Is this normal? Like 12 days after you invest, like historic crashes happen and shit like that. What is this nonsense? So I turn up over there and I'm afraid all of the month of March. And finally, by some perchance, I decide to go back into the market and put money again on the 1st of April. The 1st of April, which was the day when the market hit 7,750, which was the bottom. So 7,750, which was the nifty bottom, was where I put money in. And I bought which is my favorite stock, which has a lot to do with you, Chuck, called Deepak Nitrite. And I put some money in Deepak Nitrite. I put money in like a lot of different other shares and stuff like that. And most importantly, put money in a nifty index fund. So with about, I think, $25,000, I caught the bottom. There is the elusive bottom, which is everyone seems to be chasing. I actually caught it in my very first try, and since then retired at trying to catch the bottom. I also
let's hope there isn't another one.
Yeah, no, but to be fair, I have also caught the top here with some investing.
Yeah. So, my US investment story is kind of like that. It was pretty much the top, and so is my Bitcoin investment strategy, which a little bit of money. Which I put a little bit of money, and it reminds me of Naren's story because every time like we have a discussion on finance at home, right? I tell Divya, my wife, like, hey, but don't worry, like. Whatever happens in the world, don't worry. We have 60K in Bitcoin. Then next day, some other shit will happen. I say, remember, don't worry. We have 54K in Bitcoin. And next day, like, listen, it doesn't matter if this happens, that happens, whatever. We have 32K in Bitcoin. Like, so it's like a little recurring need.
No, I have my greatest thing is I have $2,000 in Dogecoin. So, so that is truly.
Now we've reached a level of confession that this show does not need.
Yeah. So that's where. So at this point, like my investing is, I have uninstalled CoinSwitch at this point. So there is no point of doing anything. I just like written off that money. Yeah. But anyway, the point is, overall, like, and with the journey that I took over a period of time, I was also like, this seems far too random. There has to be some method to the madness. That's where I discovered all the Hindi YouTubers running YouTube videos, which actually the best one I found was there is this YouTuber who was actually teaching fundamentals. So there was a lot of fundamental teaching and stuff like that, which I felt, education is not bad. Let's educate ourselves. So I gave up that and I started a lot of paper trading. So paper trading meaning just like literally writing share price down, doing analysis and writing a price where I bought and sold on paper without using any real money. So after making some little bit of paper money, I actually ended up then putting some real money. And that's what. The other point is, honestly, my trading journey can be rather negligible because, like Sameer said, it's just been a hockey stick since then, right?
Yeah.
Now the point is, anyone who has invested since 2022 is the real test of how you're doing shit. So it's just been up. It didn't matter where you put the money; it all went up anyway. So that's my investing story.
Going to take a little break from this episode, and we will be right back. And now back to our conversation on finance and investing with Sameer Mohan.
Chuck, do you have a particularly hilarious investing origin story?
Did we just go through all of them? My IPO story.
Origin story.
No, not really.
I have a story.
But please, Sameer. I think it's about time you started talking.
Yeah.
Right? My story is quite boring.
No. I mean, one of the things, right? Like this reminds me of an anecdote. Someone told me specifically, and there's a graph also to back up, right? Like which says that if you stay in the market for 6 months, your probability of or a year probably. I'm mixing up the numbers, but I'll get the numbers. If you stay in the market for 1 year, irrespective of MF, stocks or whatever mode, your opportunity or your probability of making a profit if you stay for 1 year is 68%. It's just 1 year, 1 calendar year. Okay. And this is based on historical returns. See, look, it's pretty much like Rahul Dravid, right? You bat till the guy collapses, right? Pretty much the markets are that. You have to get battering, and then once the battering goes, it's there. And to give a very anecdotal example, I have a crippling fear of flights. Okay.
Thank goodness. I thought you were going to say I have a crypto.
No.
My radar goes up whenever somebody says crypt. Thank God it was only crippling fear of flights.
Yeah. I mean,
because you know that one of the two things are going to crash. A little bit of dark humor unnecessarily over there.
But the punchline is my airlines don't reflect, but there's a crippling fear of flights underneath. That's the punchline that I used to use. So need be, but then there is travel, young couple, 3 years married, travel goals, all of that, right? Suddenly we decided, listen, I think it's time. Let's get a car that's meant for travel, YOLO and all of that, right? Like, I don't advise this to people. People don't do this. I think for the down payment that I ended up paying and I ended up pulling, I think it was a 2.5x return on something that I had invested in 2018. And it was in a mutual fund. So the moment I pulled it, I was like looking at it and saying, "Kya kiya maine?" My first expression was,
compound interest.
Where did you do this? And then my partner looks at me and she's like, dude, how much money are you actually holding? And you're saying that you're earning paycheck to paycheck. Tu sach bata, tu kya kar raha hai? Tu zindagi mein tera kuch shady ko nahi kar raha hai kya? And then she was literally surprised. And then I said, listen, now it's time you start learning from people and you go in, you start investing. Now she's like, okay, fine. There is this thing called market. There is this thing called, mutual fund and all of that. And then she suddenly realized. So yeah, I ended up getting the car and all of that. But people listening, please don't buy cars on, with your money and all of that. Please think of palpable goals. I can't take flights for most of the time. So it's a necessity for me. Yeah. So yeah, that's the story.
Wow. So it was totally unrelated to the conversation, but you drive from, say, Bangalore to Bombay if needed?
So the car's now 2 months old exactly, and it's already clocked like 4.5K.
Oh, nice.
Whoa.
Yeah.
Okay. Wow.
Awesome.
Yeah.
But this is where, I mean, just going off that particular point, like, I think some of the greatest successes even I've had on the market have just been shares that I bought, which I intended to sell a couple of days later, and I forgot about.
Yeah.
Right. So, I mean, that unintentional, like, I remember this very clearly. I think I bought, I bought some 100 shares of Pidlite at a certain point of time because I expected that it would go up and then afterwards for a short term and expected to sell them afterwards. And then I forgot about that and I closed the account and I forgot about it for 6 months. I come back and they are like 75% up from where they were because it was still there sometime during the pandemic. So now I'm like, and then I start accumulating on that and without even planning to, now I'm like, oh, I have investments in Pidlite.
There is method to this madness, interestingly. One is, so obviously, this is an investment phenomenon called coffee can investing. It began in 1950s by 1950s, 80s? Yeah, I'm messing up the dates today for some reason. Robert Kirby, the investment advisor, he used to give stock tips and all of that. So there's this person who basically took Kirby's buy-sell tips. And this guy was smart. He did one thing. in one portfolio, he had two, basically his and his wife's. In one portfolio, he followed Kirby's tips. And then in the other portfolio, he just said, I'll follow your first tip and then bhad mein jaye, baki. Let it stay there, right? And he actually got more returns than what was Kirby's top tips were. And one of the essential tenets of coffee can investing is this whole buy and forget approach. It's a bit like driving a Hero Honda Splendor in your villages, right? Like, I still have cousins who just put like $100 petrol, and I'm like, bus, we still have to go there, right? City kid of mine. Then they're like, chalta, you come, no? Why are you scared? Did you actually forget that we used to put 50 rupees in petrol? Aa jayega, aa jao. That is the approach that should be to investing. And Pidilite, basically, I don't know if you know this or not, ticks off all the boxes of coffee can investing. Coffee can investing is a model, right? Like, it says you have 4 basic metrics, which is revenue growth, ROE, which is return on equity, return on shareholder value, and the growth in itself. So all of these metrics actually Pidilite, meets that. And it's very curious that, you're telling all of this, and this reminds me, oh shit, this is actually quantified stuff. There is method to madness.
No, but that's precisely where it was, right? Like, for me, honestly, I looked at a lot of, I learned a lot of fundamental analysis and stuff. But the main thing was, after all the fundamental analysis, the one thing that I found out was just go to ticker tape, look at the top, that whatever those stocks are, just filter them according to your return on equity. And after that, whatever you get, like, and stick to largely mid cap to large cap stocks. Try and minimize investment in small caps unless they're... no Radha Krishna cement. Try to avoid that. And you're pretty much golden. I mean, at that point, if you just put their money and leave it, like, there is a decent chance you'll at least make like whatever 7 to 10% net on your entire portfolio, if not much more.
When you were telling me about this, when Sameer, you were saying that 68% chance of making a profit or something, right? There's this beautiful graph from the US equities that just sums up the last 1.5 years ka madness and correction beautifully. So there's this fund called the ARK Innovation Fund. Pretty sure Srikeit at least must have heard about it, because apparently backs all the riskies, startup, whatever, and its graph is pretty much, forget hockey stick. That's like, it's another sport altogether where it's gone up. And while the laggards,
it's called bungee jumping.
Yeah,
it's usually called bungee jumping.
The other way, bungee jumping upwards. And the graph was like this, right? You have your NASDAQ like this, and the ARK Innovation Fund is up and away like this. And then once the frothiness was over, it crashed so much that today the two graphs have coincided, at pretty much the same point. So I think that just sums up the last 1.5 years in terms of equities quite nicely. And your point, like, the longer you stay in the market and you just forget about it.
Very true.
Sort of like the better. Like, whenever I'm not a geek into investing or something, but whenever I see one of my stocks doing a little badly, and there's always this reaction like, oh, should I sell it? And then I just do one simple thing. I just go to Google, look at the stock price or on Money Control, and just zoom out and look at, okay, what has it been like for the last 10 years? Or how has the stock been for the last 10 years? Or how has the market been for the last 10 years? When I look at the US stocks that I have, and like, should I just like forget about it and take everything out? I say, let's go back from the 1920s onwards and look what the general trend has been like. Okay, fair enough. I think we should be fine as long as we stick around for another 5-10 years.
Yeah, and the other aspect also, which is
crypto is not this way. We'll just get to
Oh, that is just please.
They're literally going to the moon, right?
but I mean, this is the other one, right? Like, when the 2020 ka big crash happened at that time, and then there was, from that 7,500 when that rebound started and all that stuff, right? A lot of conservative market people were talking about it being what is called a dead cat bounce, right? So after a major crash, the kind of reboot that happens is kind of like called a dead cat bounce, where it reboots for a bit and then crashes even harder.
Oh, is it like rebound sex?
Won't exactly classify it there, but I would go more on the lines of, I mean, it's definitely not as enjoyable, at least. But so
it's basically finding a cab in Kormangla on a rainy night, and then you have 10 people accepting you, and then they're saying, sir, drop el madodu, and then they'll be like, cancel. Yeah, but there's market dynamics. There's market dynamics involved. One cab driver during one airport ride literally had like a whole conversation, the whole duration, at 4:30 in the morning, and he just blew my mind about it. And then I'm like, yeah, boss, there is reason for you guys canceling. So I understand. And like, yeah, good.
Wow. Anyway, the point about the dead cat bounce, that the dead cap bounce, was more on the lines of now that the correction is happening finally, there are some people who are actually saying this has been the largest dead cat bounce ever. That it is actually like the recovery. So the crash happened which is the COVID crash happened, and this is still because again there was that COVID crash happened, and then everybody went like really diving in because they were like dumpster diving, and they pushed the market up even beyond what it was there. But now they're almost predicting and kind of talking about it that this is going to go all the way back down, nearly up to there. And everybody is like, okay, the market is still too hot. The market is still too hot. It needs to cool down a lot more. And a lot of that gain that happened post-pandemic was just froth and not really fundamental gain in any which way. So anyway, that was
froth and excess liquidity, in people's hands.
Yeah,
they had to put it somewhere.
Exactly. And
all of these things, there's that word again, compounds into each other, right? Like suddenly when you have a lot of people getting into the market, it goes up. You have entrepreneurs thinking that, oh wow, this is a new age of equities. You have people like Robin Hood doing whatever it is they're doing. So it all kind of builds on top of each other. And there's this entire trend of TikTok influencers who give out random gyan. So I guess all of these things just builds onto builds atop each other, and that sends signals to other markets, right? So I'm pretty sure, for example, that frothiness in the US rubbed off over here as well.
One thing that I'm not much of a trader or anything like that. I'm more of the buy and keep whatever. So I don't have many shares. I have a few shares, but they're there. You don't sell them. So
Radha Krishna Cement.
Like Radha Krishna Cement. I have another one called Bihar Alloys. Don't let me talk. So
wow.
Yeah. So when Bihar Alloys becomes like Infosys, I'll be like right up there with Mukesh Ambani and Elon Musk. So what I was saying is like oftentimes. So I'm a bemused bystander most of the time when the market is going up and down. No skin in the game, so to say. And I'm amazed at how little connection it has to whatever's happening in the economy, right? And everybody on CNN is my favorite. The one thing that I want to really become is a business, whatever, the stock market host on CNN, because all you do is make up explanations for whatever has happened. Yeah. Just the most bizarre ones.
Naren just explained Jim Cramer show in 20 seconds flat. In just 20 seconds.
So right now, I just thought that, but the other point is that in the long run, the market does actually respond to the economy in general, and it does then once it figures out that the economy is really doing well, it starts zooming up. So right now, it is a strong possibility that might be happening, because the economy, despite what it looks like to us, is actually doing well. So
so I have a question for both Sameer and Srikeit, actually, Srikeit, because you started looking at these graphs and things like the Gopalakrishnan index and things like that, right? So I think we are all in broad agreement that in the long term things are going up. The best way to invest is put in money and forget about it. And whatever. So
but the problem is right now, I mean, there is a little bit of problematic point with put in money right now, though. But anyway, go on.
All right, fair enough. But a question that I have is like, how much do these numbers and metrics and whatever Economic Times tries to tell me, like Nifty is breaking some candlelight index or some rubbish like that, I have no idea what they mean. Like, how much do they actually mean, and how much of it is what David Graeber would describe as bullshit jobs? How much of it is just people keeping each other busy, and it's just that? So I might have stepped on a few toes, but like,
I am seriously wondering if I should answer this.
One second, Sameer, I'll tell you what. Let me answer it, because I'll give a very basic garbage answer. Then you can have the esteemed and informed last word after this. See, from my perspective, the one piece of advice that I saw somewhere, which so there are like you said, whole bunch of indicators, whole bunch of like models, investing philosophies, all of these.
I understand things like I understand things like PE ratio and ROE and all that. Like, yes, those matter, but
that's what it's. see, I can almost, and this is something I can draw because our context is there. It's like digital marketing metrics, right? So when you look at it from that perspective, you have 5,000 metrics that you can look at. All right. And everybody can make a case for why this particular metric is the killer metric.
Absolutely.
Right? But at the end of the day, there is, again, if you were to ask which is the killer metric, there is none. Right? If you were to ask which metric should I look at, probably a bunch of them, and make your decision based out of the metrics also. Right? So that is also somewhat true of the market as well. Although the one thing I'd say is, which is also again true of digital marketing, is whatever metric you choose, have consistency in following that metric across.
Fair enough. I think that's a great point. I think that's a really good point.
Yeah. If you're making a decision today on ROE and tomorrow, like 3 days later, because your market is going down, you're making a decision on money flow index or whatever else, then you're going to get screwed. So you need to look at
what listeners cannot see amidst that very good wisdom from Srikeit is 10 years of frustration of speaking to clients. He's translated that frustration in digital marketing, and he managed to put an analogy layer on top of this for the purpose of this podcast. But
Sameer, that is my 2 cents on this. But Sameer, go ahead.
I have a simple philosophy, right? Like, and that simple philosophy is something that we reflected on our app. We thought if we could productize it. Sorry, shameless plug for the app.
Yeah, it's okay.
Is that, look, the simplest thing is you want low cost, right? देखो पैसा बनाने का है, हम लोग भी पैसा बनाने में, right? Like everyone in the AMCs, everyone from the person who's suggesting you the funds and all of that. There's some mind-blowing stats that I'll come towards the end, but everyone's in it to make the money, right? Like you understand that both parties are there, no one's doing charity, right?
Yeah.
So the simplest thing that you do if you are very confused is test out the waters, right? Like pick something as simple as, you know that a country's economy, you are in the news cycle. You can see whether the country's economy is booming or going bust. The first few pages of every business paper says that XYZ company is venturing into this, or XYZ company's Q1, 2, 3, 4 results are out, right? So you have a fair sense of what's happened in the past. You have a fair sense of what's happened in the future. And now you sit here and you say that, okay, as a result of this, India ka economy agar badega, so what is my next course of action? Do I invest in each of these individual companies? Mind you, some of these companies are not listed on the public markets, right? Some of them could be some startups or all of these things. Some of them could be servicing bigger clients. So the only thing then you do is just pick an index fund. Just pick something and say that, boss, I have low confidence. I don't know what's going to happen. I'm just going to pluck 2,000 every month and just forget it, right? Let's see what happens in 3 years. That's how a lot of people should get into investing, because trust me, at 20s or 30s or even in my age, I just gave my age away, you do not have the time to look at sheets. You do not have the time to look at ROE, ROC. You'll be like wondering, hey, mera cap kyun nahi aa raha? Why am I not getting any or if you're like me who's married, my only concern is, dude, shit, how do I go to the bookstore without telling my wife, because she doesn't read? So you have like real world problems that you have to think about. So in such circumstances, you can't be poring over financial sheets.
Yeah.
If you're still more concerned, best is just go talk to a financial advisor. Say some uncle, not the take my LIC policy or go to this bank and do FD wala type of advice. Go to a registered investment advisor. They have a SEBI number and they'll have put it in bold letters. Talk to them, invest, dekh lo kya ho jata hai. Your skin in the game is less. And fundamentally, coming to the part about bullshit jobs, I don't think anyone is a bullshit job per se. It's all the incentives and it's all the perspective that matters, right? Like, which is why different asset classes exist. What palatable to you might not be palatable to the others, right? And that's the whole personalization game that is there. Unfortunately, at scale is a problem that even we at Fisdom are trying to solve. Even our competitors like Zerodha, Grow, everyone's trying to solve that. And yeah, that's where the game lies. That's where it lies for us also. We tend to tell you people that, hey, listen, there is this. अभी आप पे depend करता है कि आप जाओगे कि नहीं. So that's the approach that I'd say. And if you're really, I don't know, I am super skeptical. I am super confused. ये तो scam है. I've seen Hansal Mehta direct scam 1992 brilliant series. I know that all what you are doing is scam. I'd say, boss, go invest in an index fund. You will still know. And the example that I give them is, when the Harshad Mehta scam was basically happening, that was around the time when MRF went public. and got listed on BSE. Think around for like 150, 170 rupees. Today, one share of MRF swings around 90,000 to 1 lakh today. In 30 years, just one share. If you had invested $150 during 1992, now you are literally at the moon. Anyone's holding MRF shares are like crorepati. So, yeah, I rest my case there.
And we are going to pause this episode right here because we had such an enthralling conversation with Sameer that it went on for a really long time. So we're splitting this up across 2 episodes, and part 2 of this will be in your feeds next week. So tune right back in for more on finance, investing, and some bad jokes, maybe a couple of bad jokes. See you soon.